He was also brilliant in the way he love-bombed Harry and Meghan and made it absolutely clear that they have no part to play.
Okay, see you later. Enjoy. Hi, this is Alan from Alpus Group. I just want to welcome you to this webinar about making money from commercial to residential conversions. You can triple your profits by converting the residential to serviced accommodation where suitable. It may not be suitable everywhere, but where suitable, if it's in the right location in a city centre or in a location near to a centre of employment or a hospital, for example, then serviced accommodation may be quite suitable. So we'll just discuss this subject in a bit more detail. Why commercial to residential? It's because there's a surplus of commercial property, and the value of commercial property is based on the tenancy rather than on the bricks and mortar value. So when there's no tenancy or a low value tenancy, then the value of that commercial property is lower. There's been a change of buying habits affecting the high street and secondary and tertiary shopping precincts. And the recession is putting pressure on the prices of commercial property. There's a reset in process about commercial property prices. So this isn't only happening in retail centres, this is also happening with regard to offices. There isn't the demand that there was for offices. And another commercial area of activity is care homes. A lot of care homes are closing down, and this is giving an opportunity for commercial to residential conversion. I was looking at one site just yesterday in Bath, which is a care home that had closed down, and we're about to put a bid in for acquisition of the property with a view to converting it to retirement residential flats. A couple of months ago, we put an offer in for another closed down care home it was a listed building, a lovely building set in 10 acres of grounds. Our bid wasn't successful at that time, but it just goes to show there are quite a few of these care homes around which are coming onto the market. Residential property prices are more robust and are continuing to rise because, of course, there's a critical housing shortage in the UK, and the demand is forcing the house prices up. Residential property may be refinanced and held for the long term. So that this means that if you develop a commercial property into residential, you don't have to sell it. You can refinance it and hold it and rent it out as a source of passive income. How much money is there really to be made? Well, permitted development significantly reduces the risk of planning refusal because essentially you've got approval provided you meet the criteria for that particular form of development under permitted development rights. So you don't have to get planning permission. You get a confirmation, an affirmation about the permitted development. So you've got a building where the structure and the envelope exist. So there's a significant cost and time saving with regard to a normal development, which you might start from a site which is basically stripped and needs to have a building erected. In this case, you've got the building erected, you've got an envelope of the building, you've got a roof, external walls, windows, and so on. So you've got a head start in terms of finishing the building off. So what you're doing is repurposing from one purpose, commercial purpose, to another purpose, residential, and it's that fitting out that needs to be done in order to make the transition to a high value asset. Now, as soon as the permitted development is approved, ratified by the planning department, then you can refinance at a higher value. So what it means is you can acquire commercial properties using bridging finance. You can get the property refinanced once you've got the permitted development ratified. And that means that you've got more money available from the funder because it's funded on a higher level of the residential value. So what you need to do with these sort of projects is choose the best residential areas in order to maximize the difference between the low purchase price of the commercial and the high resale values. Ideally, you want to be converting these properties in high value areas, good residential areas. So what does that mean? How much does it cost and what is the margin? So these are some figures which are just for illustration, but essentially the cost of the purchase of the commercial should be below £300 per square foot. You don't want to be paying any more than that because unless, of course, there's a significant residential premium. But just for a typical example, the conversion cost would be in the region of £150 per square foot. So the sales value would be typically above £550 a square foot. So these are in the more prosperous areas of the country, and that would give a profit margin typically of £100 per square foot. Now, of course, you can scale all this down and you can do these sort of conversions in lower cost areas, but the more you squeeze the margin, then of course the less potential there is for profit. And as with any development project, there is risk. So you don't want to be going into a project at less than 20% profit margin, having made allowances for all the risks that you are aware of. So as we've already stated, permitted development reduces the risk of planning refusal. The structure and envelope exist. As soon as the permitted development is approved, you can refinance at the higher level. You need to choose the best residential areas. And we talked about this example here. So where to start? Because every project and every area is different. And what you should do is consider the location of the property and is it suitable for residential conversion? What I mean by this is, are there noise issues? Is it backing onto a railway station? Are there going to be continual noise problems? Are there highways considerations and parking problems? what is the purchase cost of the commercial property and what are going to be the conversion costs. And these would include the design and construction fees, the finance costs, the resale costs. So you've got solicitors' fees and you've got estate agents' fees if you're going to resell the properties. You don't have these if you're going to refinance and hold the properties for the long term. But essentially, you've got to be sure that the margin you're going to get is sufficient to warrant carrying out the conversion and that you can actually sell the product that you're making. You need to be very sure about that, because just because you can do something under permitted development rights doesn't mean to say that you should do it. So we've got a 5-step property development success process, and it goes something like this. First of all, we identify a prospect site, and for that we need to calculate the feasibility of the project. The first question is, does permitted development apply? If it doesn't, and we have to go to planning permission, planning application approval process, then this would significantly increase the risk on the project, and we may well decide not to proceed with it, or we could take an option out on the purchase of the site and put an offer in subject to receipt of planning permission. And we're just doing that on the care home site, which I mentioned to you earlier in Bath, where we think that it would be suitable for conversion, but it's not a permitted development project. It's a planning application and approval. Therefore, we have to put an option in, because what we don't want to do is to buy the site and then get the planning permission refused by the planners. So what we're looking for is a low purchase price, ideally, and a high resale value. And the attractive thing about retirement flats, which we're planning to do on the Bath site that I mentioned, is that retirement flats would usually hold a premium of something like 25% over normal flats. But of course, you've got to have these retirement flats in the right location. So they've usually got to be provided with parking. You've got to have possibly a bus route nearby, and you need to have a relatively quiet area. You wouldn't want to have retirement flats in a bustling city centre site. So that's the identification of the prospect site. The second thing that we do is we prove the feasibility based on preliminary design. So we calculate all the costs of the purchase. That's the site cost plus the solicitor's fees plus the stamp duty, land tax, any VAT that's applicable on any of those, plus the design and construction costs, plus local authority fees, that's planning fees, building control fees. There may be other specialist fees applicable, for instance, environmental surveys or other sorts of surveys that are particular to that site. There are solicitors' costs when you sell the property, if you're planning to sell it. And you have a estate agent's costs when you're planning to sell the property. So all of these need to be taken into account, and a suitable profit margin of 20% plus 20% minimum, and more likely 25 to 33%. Because as with any development, this is a risk business. And even though you plan to make a particular margin, sometimes things arise and you don't necessarily end up making that margin. If the works get prolonged, for instance, your finance costs get increased because of additional interest as a result of material delays or other issues to do with the scope of works, issues arising with problems with construction, unexpected problems, which can always occur. So you need to ensure that you have suitable contingency as well as a sufficient margin, profit margin. So the third step in the process is to acquire the property or to take an option to purchase. So if permitted development applies, then you can acquire it immediately, and you can use bridging finance to do that. If planning permission is needed, then you should consider an option to purchase subject to planning permission being granted. Step 4 of the 5-step property development success process is sales and marketing. Now, this is because if you are looking to sell the properties on, then you may well start marketing these properties before you actually start on the works. You want to appoint an agent, and you could have a sales and marketing campaign and try to get buyers while the project is at drawing board stage. And this will smooth your cash flow. You get money coming in, which will ensure that you're able to meet your commitments for repayment. Obviously, you don't want to sell these properties too cheaply, but equally, a bird in hand in terms of selling the property is a significant achievement. And if you've got 6 or 8 properties that you're developing and you can get advanced sales of 4 of them, then you've basically covered a significant part of your risk. And you could sell even more than that off drawing board. So that's quite an attractive way to proceed. And then step 5 is the detailed design and construction. And of course, this will overlap with step 4, the sales and marketing. And this is the real technical part of the design, ensuring that the residential units are fit for the market that you're anticipating selling to, whether they're residential flats, they may be first-time buyer flats, they may be for a particular market that's applicable in the area where you're developing. For example, they may be suitable for holidaymakers if they're in a resort and they've got a sea view. You might want to put balconies in and open doors so that people can enjoy the view, enjoy the air. So it all depends on the purpose of the units that you're constructing as regards the detail of the design and the construction. So why listen to me on this subject? Well, you can work it out for yourself. Lots of people do. And I have worked in construction all my life. I've carried out many property developments for developers and also for infrastructure companies. And I've got decades of experience having worked for contractors and consultants and also for client bodies. So I've seen property development and construction from all sides, and I've carried out projects from the smallest to the largest in the UK and also internationally. This happens to be a picture of Chelsea Harbour, which was a development I was involved in working for P&O developments in the late 1980s, and saw that site transformed from a derelict industrial site to high quality residential value mixed use development. So there was a hotel there that's in the foreground. There's mixed use commercial, and there's residential in a number of blocks in that development. So a very high value, high margin property development in London, carried out by P&O Developments. And I've been involved in lots of different sorts of projects as well, not only that sort of project. This is another very interesting project that I was involved in after Chelsea Harbour. This is Hyde Park Residences, which is a luxury serviced accommodation block. It's 18 luxury flats, and it's a conversion of a listed building at Hyde Park Gate. And you can see the quality of the design and the interiors there. A listed building and converted to an extremely high 5-star hotel standard of design and construction and fitting out. And this is because people who would be staying in this accommodation would be families from abroad who would be booking to stay in a flat rather than in a hotel. So instead of having a suite in a hotel or rooms in a hotel, they would book into Hyde Park Residences. And this particular company has a number of these style properties in central London. And they've got a very successful business letting to overseas clients, the equivalent of hotel standard. And they've got the maid service, and they'll bring in chefs who are available for the residents in these flats to actually entertain if they want to. So it's a lot more of the home comforts than people would expect if they're staying in a hotel. So as you can see, good design matters, and so does good quality construction, which all needs organization and management. Building is made to last, so you need to get things right first time, and to quality, to budget, and to time schedule, and of course safely. Quality assurance and control is essential. Health and safety is mandatory, it's not optional, and so you need to ensure that the appropriate parties are appointed to look after all of the health and safety obligations that you have as an owner when you're developing a particular project. So when you assess the number of designers, contractors, subcontractors, specialist suppliers, all these different parties who are working towards the provision of one typical project, there are a lot of moving parts and there are a lot of loose ends, and you need to ensure that you have somebody appointed who will pull together all that effort from these diverse parties, ensure that the focus is on your project, and that you ensure you complete to the right time, budget, and quality. I've written a book about my experience of a large number of projects during my career, and I've identified 20 key factors for project success. And these are the issues that you need to get right for a project. Now, I'm not saying that on every project all of these things are 100% correct. They're not usually. There are obviously factors to do with any project, but if you get all these 20 key factors correct, then you will be well on your way to ensuring that your project as a whole is successful. So we'll have a look through this list very quickly. You need a clear and concise project remit or brief. You need to be very focused about what it is you want to achieve from your development. You don't want to waste money on adding value where it's not going to be recoverable in your selling price. So it's very essential when you're carrying out any sort of development to have a clear and concise project remit or brief, which will control the standards of specification, the designs, and also the scope of the construction work. So the second key factor is risk assessment and contingency. And this is very important because very often property developments are assessed from a very early stage with very preliminary information available. So depending on what the site is and the conditions that you're required to address, particularly this issue about planning permission, you need to make an appropriate risk assessment. And then that needs to be reflected in the contingency sum that is allowed for completion of the project. It's no good having a project where you don't allow sufficient contingency in your budget and you run out of funds. You've got to go back, try and scratch around and get some more money. You need to ensure you have the right level of contingency for the project that you're carrying out, taking account of the risks that are involved in that project. So this brings us on to the third point, finance and funding. Your scope of works should be fully assessed and your risk assessments and contingency provided so that the funding is made available for the whole of the project to be executed. As I mentioned, you don't want to be running out of money partway through. Fourthly, and quite obviously, but you need to be absolutely sure that the site is available and accessible. So that means that you have to have possession of all the site, legal ownership of the site, or that the legal owner of the site grants permission for the works to be carried out. And not only does the site need to be available, but also there needs to be access to the site for vehicles and for materials to be loaded out for the works and stored. In some cases, you get very tight city centre sites where it's very difficult to find space to store materials that are going into the works. So you need to ensure that in your planning for the project, if you have got a very tight site, that you phase the construction accordingly to bring in materials just in time for the construction, or that you provide for storage areas, and these can be on scaffolding or gantries in some cases where there is very limited space. Gantries are the thing that you need for material storage, not scaffolding. Scaffolding is for access for works to be carried out, but materials do need to be loaded out onto scaffold in suitable small quantities and within the loading parameters of the scaffold. Point 5, key factor 5, you need to ensure that all the statutory permissions are in place. That is planning permission for the project to be carried out and building control permission. These are distinct permissions, and even if you have planning permission or you have permitted development rights, you still need building control permission. So the drawings that you submit must be approved for building control, and those drawings must be used for the execution of the works. The works must be carried out in accordance with the approved building control drawings. Point 6 is any special protection measures and party wall agreements. So this comes about where you're carrying out work where there are neighbouring properties and you need to make protection for the possibility of damage being occurring as a result of your works, and damage to individuals or to property. So you can't allow works to proceed which are going to in any way have a risk of damage to any neighbours, and you may have to carry out a party wall agreement if you're carrying out work on the party wall between you and your neighbour. And there's a particular legal process for this, and there are 3 stages, and you need to go through each of the stages and agree the designs for the party wall works with your neighbour before the works are carried out. So you have to fund the costs of all this. Your neighbour isn't initiating the work, so you need to fund the costs of the alterations to the party wall that you are requiring as a result of your works. Point 7, protection of utilities. Now, there may be utilities crossing your site or passing near your site. In some cases, there may be a substation on the corner of the site, and there may be cables going to and from the site. So you need to ensure that you have the right protection measures in place for any utilities that are passing through your site, either underground or at high level. Point 8, enabling or advanced work. Sometimes it's convenient to take out any demolition works that there are and carry them out as a separate package of works. So this could be called enabling works, and you would usually carry this out while you're completing the design for the project. It essentially means that it gives you a bit of time to complete your tendering of the main contract works while an enabling works contractor is carrying out this advanced works. Sometimes advanced works are diversions of cables where they need to be diverted for the permanent works to be carried out. Point 9, identify the appropriate contracting strategy. This is your strategy for implementation of the work. So there are three ways of carrying this out broadly. There's a traditional arrangement where the owner appoints the designers and completes the design for a contractor to carry out the implementation. This is the traditional process. Second option is to have a design and build contract where the owner only carries out a preliminary design with his architect, and the detailed design is carried out by the main contractor, the design and build contractor. And this has found favour in more recent years because of delays which used to occur with the traditional process. And the third option is to carry out construction management, which means that there isn't a main contractor as such. There are a series of design and works contractors who carry out the work. And the construction manager manages the work on behalf of the owner the contracts are set up between the owner and the respective design and construction works contractors. Item 10 is there needs to be a fully complete and buildable design. This is very important, and the design and build contract that we spoke about has the advantage that the responsibility for this is with the contractor, with the design build contractor. If there are problems with an owner's design, then this can cause delays and claims to occur from an implementation contractor. If he has to delay or change his method of working, it can result in quite significant claims. Point 11 is quality assurance and quality control measures. So this applies to the designs as well as the construction work, and you need to have control measures in place to ensure that the work is carried out to the appropriate quality, and that there are responsibilities for addressing this if the work is not to quality. So there's got to be a quality assurance, quality control system in place, and usually the contractor is responsible for addressing any faults or deficiencies in the implemented works. Point 12, building information management and modeling, very important these days with computer-aided design, and the interfaces between specialist subcontractors who may be providing certain components and the design drawings. So you need to set up a protocol for dealing with building information management and modeling. Point 13 is contracts and collaboration. If you have got more than one contract, you need to ensure that there are clauses in all the contracts that you have to ensure that people collaborate with one another. It sounds obvious, but you'd be surprised about how many problems can occur if you've got two distinct parties who are not obliged to discuss or to exchange information. So you need to ensure that your contracts provide for this. Point 14 is health and safety. So you need to ensure that your works are carried out in accordance with all the relevant legislation. That's the RIDOR regulations and the Construction Design and Management regulations and the Health and Safety at Work Act 1974. This deserves a lot of attention, because if you are responsible for a death or a serious injury and you don't have the right measures in place, this is one area of the law which does carry a custodial sentence. So you need to be very sure that you've got all your obligations covered. Point 15 is stakeholder management. This is the point of informing people and consulting people at the right time about what's going on. So keep everyone informed, keep everyone in the picture, ensure that you get buy-in to things that are being done. Some of them may involve compromise on the part of certain parties. So you try to bring people along with you rather than have disagreements which may cause delay or disruption to the works. Communications and protocols. This is the agreed way of communication on the project, whether it's email, what is required in terms of contract documents, variation orders, valuation certificates, contractual letters. All this needs to be agreed in advance, what's going to be done. You don't want to have an evolving system where there are gaps in the communications and uncertainty as a result of miscommunication. Point 17 is progress reports on schedule and budget. This is very essential because usually projects are on a tight timescale, and if anything is going not to schedule or not to budget, you want to try and pick this up as quickly as possible and make sure that not only do you know what it is, but also that you have an action plan for addressing this non-conformance. If things are being delayed, you need to bring into play an action plan to overcome that delay, get the time back, take an alternative measure which will avoid the effects of the delay. Point 18 is progress meetings. These are also very important because not only do you need the reports, but you need people accountable for taking actions to address things that are going wrong. And it's only at progress meetings where face-to-face meetings can question who's responsible for addressing a particular point, who's responsible for bringing it back onto the program, who's responsible for addressing a cost overrun. You need to have people accountable and minute the fact that they are taking the necessary action, and then follow up to get that action closed out in a timely way. Interfaces and interface management, if you've got numerous interfaces between contracts or work packages, you need to ensure that these are being managed by somebody. It's usually the project manager. If you don't have a project manager, then you need to be sure who's doing it. And leadership is the essential thing, that you've got a culture of decision making and that problems don't drift, that in fact you ensure that problems are resolved as they arise, not left to cause further delay, further disruption, further cost increase. So those are the 20 key factors for project success or failure. If you get many of these wrong, then you're going to start to have a failure on your hands. And it's surprising how many times I've been offered projects which have gone wrong. I can recall one project in Liverpool where a block of 16 flats had been abandoned, partway finished, and the site was for sale. There was another site in Wiltshire where a few flats had been partially finished and abandoned. And another project just over the weekend, I was offered a public house that had been started, not finished, and the developers want to sell it. Well, nobody in their right mind would pick up a project like that with the risks that are inherent in work being partially completed. I mean, who's going to validate that the quality of the construction or the design is there? It's an extremely dangerous business, and certainly you want to avoid being in that sort of situation. So what options do you have as a potential investor or developer? You can appoint a project manager to sort out all the issues. Well, obviously the cost of such an appointment is going to be significant if it's a consultancy, or even if freelance would cost you £5,000 a month approximately. So this comes off your bottom line. You need to ensure you budget for this sort of resource, because management is essential. You can't do without management. These resources don't just come together and suddenly gel. Or you can do it yourself. You can learn on the job. You can save the fees of appointing a project manager. But as I've mentioned, with jobs that go wrong, you may lose a lot of money and you may lose a lot of time by making mistakes. So option 3, there's another possibility, which is to partner with us. You can book a call with me and we can discuss what your project, property or investment interest is, and we can formulate a strategy to implement it. We would help you to implement it by involving you in our contacts, our network of contractors and designers. Our power team can be at your disposal if you need that sort of resource. If you've got it all sussed, then that's fine. But if you have an interest in working with an experienced company who has the best quality and the best outcomes in mind and available to you, then why wouldn't you use such a resource? So if you are interested, you can schedule a call with me on calendly.com/AlanJE. We collaborate with different stakeholders and parties such as property owners, property investors, property management companies. We can arrange creative finance strategy. We carry out joint ventures. We acquire properties and portfolios, and we transform property value. So you can participate in our partner scheme if you would like to participate. Call me and I can share the details. We're part of the following property networks, property investors networks, that's Simon Zucchi, property entrepreneurs network, that's Jack Dakra, Sourcing investments, we're a member of that group for sourcing properties. Progressive Property Ventures, we have got a venture with them. Cobra Club, which is business networking organization. Startup Disruptors in Portsmouth. And our network is constantly growing. So we've got a lot of contacts, a lot of exposure to deals all the time, development sites, investments. Just talk to us and tell us what you need, and we will make a plan for giving you what you need and identifying what's required, but basically we'll support you along the way. We've got a property development success course, which normally costs £1,997. It's a 2-month course, 8-week course where we step through the property development success process. Module 1 consists of identification of sites and prospects, and we will go through actual real examples. We've got direct to vendor letter campaigns which have resulted in some results which we can go through with you, as well as other projects that we're looking at constantly. There's constant turnover of sites and prospects. Module 2, preliminary design and feasibility, will go through what is appropriate for different types of sites. Module 3, the funding and cash flow, we can make available to you all the network of brokers and funding companies that we use. Module 4 is site acquisition and planning approval. We can go through the options there for site acquisition and planning approval. Obviously, our preference is for dealing with permitted developments rather than going to planning approval, because you just don't know what the outcome is going to be with a planning submission, and you may get rejected, you may get accepted, or you may get partially accepted. So you just don't know what the time scale is going to be. So we can discuss all the usual means that we use to overcome these sort of risks, such as putting in an option to purchase a site and only purchasing it once the planning approval is granted. Module 5, marketing and sales. This depends on what the exit route is that you have planned for a particular project, whether it's a rental exit route or a hold and finance, or if it's a sale of the properties that you've developed. Module 6, detailed design and construction. We talked a little bit about that, and we go into a lot more detail in this module. And module 7 is all about system building, because we encourage factory produced housing systems, modules wherever possible. So essentially what we'll be looking to do is minimize the site work and to carry out as much as possible in a controlled environment like a factory, and then bring completed modules to site. Module 8 is about management and control systems. So it's how to manage your project, what systems and processes put in place. So it's quite a comprehensive course, which is carried out over 2 months, and we would actually support you for a month beyond that with any questions that you have. You've got direct access to me, as well as complete email support for the 3-month period during which this property development success course is carried out. So if you're interested to contact us, this is me, Alan Edwards. I'm on the Simon Zucchi Properties Investors Network Mastermind Program. At the moment, we're based in Hampshire in the UK and in Slovenia, so we got the ability to operate all over the UK and in Europe. My phone number is +44 333 224 1257, the landline, or +44 7539 141 257. My email is alan@alpusgroup.com. If you want to schedule a call with me, you can book a call at calendly.com/alanje, and our website is there, www.alpusgroup.com. And if you add the suffix for the thing that you're interested in, i.e. www.alpusgroup.com/property investment. That gives you one option. www.alpusgroup.com/property development gives you another page. www.alpusgroup.com property education gives you another series of options. So if you're interested, get in touch for a no obligation discussion, and we'll tell you what deals we've got going on at the moment, what opportunities there are for property investors. And if you're a property owner, we can help you to transform the value of your property. So talk to us about whatever your particular property problem is, and we'll try and help best we can. If we can't help you, we'll point you in the right direction. Okay, thanks very much for listening, and see you in a future webinar. Cheers for now. Are there any questions that anyone's got? I'll stop sharing, and if there are any questions, then we can discuss them. Pop them in the chat box. Is there any issues that you've got, whatever the subject is, if it's to do with property investment or it's to do with property acquisition or property disposal? We acquire properties, we acquire property portfolios, we deal with a lot of investors, and we've got investors who are willing to take on board all sorts of properties. Sometimes we need to do work to it before they'll take it on. But tell us what your particular problem is with any property you've got. We can help you solve it. We can use creative finance solutions to get money in order to improve property. Obviously, there's cost to doing that, but we've got the ability to arrange it. And without sounding arrogant, I don't think there's any property problem that we can't solve with sufficient time and sufficient resource to do that. So if there are no questions, then I'll end the session for today, and look forward to seeing you on a future occasion. Thanks very much. Cheers.